Hello traders and welcome to another video review. Today is Wednesday, May 18th, 2022. Let's start with the Forex calendar. Overnight we got data from Japan. Gross domestic product deteriorates less than expected, only to minus 0.2% versus minus 0.4%, which is less than 0.9% last reading. That's the first data overnight, and the other data are not that much important, so it's not a particular market movers. However, we are going to have a consumer price index data from UK scheduled for release at 8 a.m. and as you can see, the consumer price index in UK is expected to increase from 1.1% to 2.6%, the core from 5.7% to 6.2%, which is kind of a substantial increase. So we will definitely take a look at the British pound today. The same data are expected from the Eurozone, scheduled for release at 11 a.m. Consumer price index is expected to stay at the same level of 7.5%. Very interesting. The same kind of data will be released from Canada at 2:30. Canadian consumer price index is expected to drop this time from 1.4% to 0.5%, and the core from 1% to 0.4%. That's about it for today. If you are looking for the market movers, not necessarily building permits and housing start will be a good market movers during the New York session. At the end of the day, at 10 p.m. we got the FOMC member Patrick Harker to give a speech. So I think we should take a look definitely at Japanese yen, British pound and Canadian dollar. Let's start with Japanese yen. Daily time frame chart of the Japanese yen is showing us the period of distribution after the negative divergence between the price and the momentum finally has been resolved. So what we are doing right now is that after the shooting star pattern here, we've been consolidating in a narrow range with the low of the 127.52 and the high of 131.33. So this is the narrow range, few hundred pips, but that's something you can expect after you got over 1,500 over 1,800 pips rally. Okay, so 200 pips or 300 pips rally consolidation zone is not that bad at all. What do we have here? Well, maybe the third line. As you can see, this is a breakout line. Every time we break above this line, we rally. Sometimes we rally very for a longer period of time, sometimes only for a few days. Nevertheless, maybe this blue line here on this chart will be the next rally, breakout rally. The key technical support 125.15. Nothing happened since that, since our last analysis of this market. In intraday support, let me put it in blue. Intraday support 127.04, and of course the lows of the 12th of the May 127.52. US dollar to Canadian dollar next. Let's do it. What is going on here? Beautiful textbook example of a pattern, right? So what do we have here? Candlestick pattern. Where? On the top of the rally. Look at this. We went up, ABC to the downside, correction. So the wave 1, wave 2, wave 3, wave 4, wave 5. This is a very nice pattern. So another textbook example of how the market works. 3, 4, and we got 5 ways to the upside right now, and at the end of the 5 wave, we got bearish divergence and bearish engulfing here. So this is confirmation, and this is continuation. So pattern, confirmation, continuation. Where we are going lower towards the level of 1.2715, which is the low of the wave 4, of course. Please notice the fact that we already testing the 50-point level on the RSI, which means that this market is about to break towards the negative territory after this 5 waves rally. I'm wondering if we can put 1, 2, 3, 4, 5. Let's do it this way. The parallel channel, of course. There you go. This is the channel from the wave 2 connected with 4 and based on the highs of the wave 3, because this is the Elliott wave channel, not the traditional channel. We broke below this channel. So now, if this is settled, let's just move this channel to the main one. So this is the main channel on the US dollar to the Canadian dollar, and as you can see, this market is highly technical. And if you are back inside the main channel, wave 1 and 2 channel, then of course this is the time for the bulls to come in to the markets, make some noise, make some more activity, and push the market a little bit higher back again. One more and the last one, last thing I would like to add to this channel is, of course, the Fibonacci, to this chart, is Fibonacci retracement. How much did we trace? Around 38%. Very interesting level here. So we might see some kind of a bounce towards 1.2896 and then continuation of the down move. So if I'm not mistaken, this scenario should look like this: A, B, let's say, and the C towards the level of 61%. So this is our scenario for US dollar to the Canadian dollar. And last but not least, let's take a look at British pound, of course. What do we have here? The recent bounce from the lows of the 1.2155 has reached the level of 1.2498, so almost 1.5. Right, that was the bear flag, so we don't need it anymore. It doesn't mean this is something really necessary. Of course, the extremely oversold market conditions, however, the bounce occurred. However, this is still the move inside the negative zone. Negative sentiment is still the main factor on the British pound chart. And as you can see here, from the bigger perspective, this is of course the post-COVID rally. We retraced a lot of the post-COVID rally, and we are going lower and lower. That was the key technical support from 2020. That's another 1.2091. This is the next target for bulls. But then, if this level is violated, we are going to COVID low 1.1425. So the conclusion is, in the longer term, we are still in the downtrend. Okay, so this bounce here that you see is only a counter trend corrective bounce. It's really nothing like a new trend. It's nothing like a reversal, big reversal, big time. Now we are going higher and higher. No, nothing like this will likely happen in the nearest time, because we broke below the key technical resistance, and there is this move to the downside. It still has not been finished, simply. However, please watch the level of 1.2677 and of course the lower channel line. The key technical resistance, however, is located here. This is the key technical resistance, 1.3. Why? Between this low at 1.2155 and 1.3 is almost 1000 pips. To be honest, it's 845 pips. Okay, so If we get here, the reversal will be substantial and we might have a V-shaped pattern. However, we need to break above this level in order to continue the big reversal or correction, or even start some bigger cycle to the upside, like a uptrend or something like this. So please keep an eye on this level. It's far away for now. However, this is the key level. The one that is a little bit nearest the current market price is 1.2677, and it's looking good. It's looking good for the bulls so far. Hopefully, let me just put one more level here. Hopefully, we will test the level of 1.2639, 1.2677. This is the zone. This is a nice breakout above this local technical resistance, 1.2413. Now this will become technical support, and we are waiting for the market to break into the positive territory, and of course for the market to test the 1.2677, 1.2639 zone. Last but not least, let's take a look at the S&P 500, what is going on there. So after the 5-wave decline is done, A, B, 5-wave decline in the wave C, after the target for the wave C has been hit, after the pin back candle at the end of the move has been done, we have a time for a bounce, and the bounce has broken above the 4,000 level and now is testing the other zone located between 4,137, 4,084 points. So this is the next key zone in the short term. However, please notice the fact that if we break above this zone, the next level is the high of the wave 4, 4,312. So we might see some kind of a bounce after the ABC pattern has been done. However, this doesn't mean that the S&P 500 has returned to the uptrend. Okay, we are still waiting for the confirmation. The first confirmation that the S&P 500 has returned to the uptrend is breakout above the level of 4,368 and then above the wave B high at 4,668, and the wave 4 high is 4,368. 4,658, almost the same level. So high of the wave 4 must be broken, high of the wave B must be violated in order to return to the uptrend. As long as we are trading below high of the wave 4, for example, wave 4 high or wave B high, the outlook is still bearish, and as you can see, we are still inside the bearish territory here. Negative sentiment, negative momentum is prevailing the bulls to rally higher. So that's my analysis for today. Thank you very much for watching this, and I hope I see you guys next time. So take care and bye bye.